Hello, this is David Kearns on the Moneycore trading floor on Friday the 19th of March, bringing you our weekly commodity currency market update. Following last week's dramatic decline of the pound against the commodity currencies, we did actually recover some ground against the Australian and the New Zealand dollar. The sterling Canadian rate of exchange did, however, revisit the previous lows and has not been able to appreciate at all this week. We found that the pound was certainly helped by the release of the UK's jobless claims, which unexpectedly declined by 32,000 in February. The pound was further buoyed by news that the government public sector borrowing requirement for February came in at just 12.4 billion rather than the expected figure of around 14 billion. Yes, this is an appalling number. However, the fact that the previous month's revision to the public sector borrowing requirement numbers, the actual deficit had been amended to just 43 million pounds from an earlier reading of 43 billion, which added further weight to Alistair Darling's prediction of an overall deficit of 178 billion pounds for the whole of this year. And perhaps we can now consider his figures to be correct, or even, dare we say, come in at a far lesser cost to the UK. Down under, the Australian dollar continues to remain strong as the Reserve Bank of Australia leaves its door open to further interest rate rises. Having already increased rates to 4% over the last 6 months in an effort to ensure that their strong economy does not overheat, it can be expected that the rates will gradually move higher again over the course of 2010. Further signs of growth from the Australian economy came from their housing starts data, which provides measures to the number of new residential buildings under construction. This figure jumped dramatically to 15.1% for the quarter ending December 2009, which represents their best performance in this area since 2001. Over in New Zealand, we saw their dollar remain strong, although their economic releases were far from flattering. New Zealand's consumer confidence levels dipped from a previous quarterly reading of 116.9 to 114.7. Any reading above 100 indicates that the optimists outnumber the pessimists. However, this drop can be considered a good indication of a steady but unspectacular recovery to consumer spending in New Zealand. Across the Atlantic, we have seen the Canadian dollar fast approach parity against the US dollar, with the pair traded at a low of 1.0080 this week. Canada's January factory sales, they actually rose to the highest level seen since November 2008. The rebound in demand for the Canadian products from the US has helped further boost their exports. Their inflation release, monitoring the change in the price of goods and services, jumped 0.7% in January to take the annual level of inflation to 2.1%. This will likely add further pressure on the Bank of Canada to raise interest rates later this year, which will further fuel demand for their dollars. Whilst in the UK, we now await the Labour Party's budget and also the announcement of the date of the general election, although it is predicted to be the 6th of May. Whilst we await that, the pound against the Australian, the New Zealand and the Canadian dollar will remain under pressure as the swings in the latest opinion polls are made public. For further information and to contact us, please visit the emigration pages on our website www.moneycore.com/emigration. Have a great weekend.